consumer balance sheets are pristine. I mean, for the most part, you're seeing some fraying around the edges, but when you think about what just happened, the government gave the private sector a whole bunch of money.
True.
Right? So what do you want to buy, the government or the private sector?
But when I hear you, Savita, I hear you talking about the potential for earnings. I don't hear you talking about the potential for what people will pay for those earnings. And when you talk about higher sovereign risk, when I start to think about that, when I start to think about what could happen to the sovereign, that makes me think that people won't be willing to pay for earnings in the same way they were, particularly foreign investors who have built up an incredible long on dollar assets over the last decade. What kind of multiple are you putting on that very optimistic outlook?
It's tricky because I think the S&P today is a very different animal than it's been historically. So saying a 15 multiple, which is the long-term average, you just slap that on and that's what you get. I don't think that's fair. I think that's overly punitive because when you look at the market today, it's, higher margin industries with a lot of potential to become even higher when you think about old economy sectors that can use a lot of this automation and tools and, little AI sprinkled in to get more.
All right, cool.
And, kind of improve margins and improve earnings variability. So I think a multiple of 20.
What's happening? How are you guys all doing?
This analysis where we looked at the S&P 500 versus
I'm just listening to Bloomberg right now. I hope you guys can hear it.
Everything else is super cheap. Now, if you adjust for sector mix, if you adjust for earnings volatility, leverage, consumer aspects, you actually come to a conclusion that the S&P isn't that expensive relative to these other benchmarks. So I think by just sort of painting this historical average, everything has to trade at the same level, I think we're sort of oversimplifying really important details about U.S. corporates.
I'm looking to see if the dollar can head higher.
Thank you.
Right?
To think about.
The dollar can head higher. And realistically, I want to see us wipe out all these highs from last week. Right? Give us a new weekly high potentially.
Are in T-bills. That means that they will be at 7%.
And there's one man who owns that, right?
Yeah.
Or owns a lot of it, anyway. Equity futures on the S&P just about unchanged, with an update on stories elsewhere this morning with your Bloomberg brief. Here's your Hara.
Because in terms of the setup that I gave, when was it? Was it Monday? I think it was Monday. I gave a setup on Monday. The video inside of the Discord where I talked to you guys about EU and what EU is most likely to do. If we can take out Friday's and Thursday's high, right, from last week, I'll be interested in seeing this drop, right? Because realistically, I mean, ever since Wednesday, really, where we had price attempt to run the low of the week, we just stayed in this range. Yeah, we just bounced from high to low. So I'm happy now that we've taken out the high. Okay, so now I want to see this continue, right? I want to see, it could be a big candle, it could be over today and tomorrow. That's perfectly fine. But looking at this, we've got consumer confidence and job openings data coming out today in about, what's that, an hour and 45. Tomorrow we've got ADP, right? We will have the new month on Friday. So we should have NFP this Friday as well. There's Labor Day for most of the world, really. Well, not most. A lot of the world, there is Labor Day on Thursday. So Thursday might be a little bit muted, but the US market and UK market are still active. So we're going to have initial jobless claims on Thursday and PMI, ISM, manufacturing PMI for both the pound and the dollar on Thursday, which is fine, right? Now, in regards to today, let's just see, even if we are only able to catch a little small move lower, right? That's what I want to see. Okay. Now, ideally, I would have preferred, right? Here's the best case scenario, okay? Let's do best case scenario first. Best case scenario, we get price pulling back into this hour candle. I like this hour candle for EU. I think it's a pretty decent area to take the short from. And also this high here, right? We shouldn't at any point trade above this high for today. Okay, if we are really going to run for these lows, I shouldn't see us take out London sessions high, at least not for today. Okay, we can do it tomorrow, we can do it you know, bloody next week if it wants to, right? Then the target can be last week's low. Okay, last week Tuesday's low. That can be the main target, but realistically, of course, you want to go for easier targets. You know, as I always say to you guys, 1 to 2 R is more than enough in terms of what you need. All you have to do is just risk slightly more and you'll be all right. Okay, so that's what ideally I'd like to see, right? On the flip side, when we look at the dollar or the DXY, we do have this half-hour candle now. I'm potentially looking at this area if we can get a pullback down lower into it. Right now we are, you know, stretching higher, which is perfectly fine, but I want to see what price does. If the lower time frame starts to look a little bit better and it looks like it won't give us a pullback, then we'll anticipate taking those shorts on EU a little bit sooner. However, when you do look at the DXY, okay, we've still got this this low here. Okay, this is my extreme, right, for today. I shouldn't see at any moment us trade beneath this low here. Okay, we can definitely pull back, we can punch, you know, deep into the candle, but we should see that low hold. Okay, and that's the best case scenario. Okay, now if I go back to the DXY and I say worst case scenario, okay, obviously worst case scenario is hitting stop loss and whatnot, whatever, but worst case scenario is we actually test this hourly candle that we tested previously, okay, because this was the catalyst that gave us that new high, if you guys remember from last Wednesday. Okay, because the dollar did drop off early doors, and we look at Thursday's low, which is here, and we look at Friday's low, which is here, okay, we still have done what EU did in terms of taking out its opposing high, right? So the dollar is looking very identical to EU right now. However, I'm not denying the fact that we can definitely drop a lot lower, right past this low point here, and play into this hourly candle again. You know, market does whatever it wants, right? So potentially, in terms of today, we've got this setup here to look out for, okay, to play, right? I like that setup to play today if we can get a pullback, and you know, we may potentially take another setup inside this candle area here. If it works, it works. If it doesn't, that's cool. Okay, now the overall target for this whole move is going to be a new weekly high. I do think, you know, with, you know, in terms of last week's price action, the little range that we had, we've accumulated the liquidity, we've taken out the low, and I do see us potentially having a nice, right, energetic move to the upside. Whether it happens today or maybe potentially waits for ADP tomorrow or NFP, I would like to still see this climb higher. Okay, as I said to you guys, there's a lot of positivity around the dollar at the moment, but recently there has been a standoff with China in the trade negotiations. So again, you know how it is right now, is turbulent times. One day it's on, one day it's off, one day everything's cool. Do you guys get what I'm saying? So at the end of the day, that's perfectly fine. Okay, now when I look at GU, okay, we had a stupendous move yesterday for GU, right? This range here, right? Obviously, I told you guys inside of the Discord I wasn't available, but this is a 100 pip move, right? 100 pip range, 150 pips, sorry, right? And that's perfectly fine. GU is also giving more room to the downside in terms of seeing us potentially give us a pullback at least, because GU definitely looks a lot more bullish than EU does, at least for the time being. But GU can definitely give a pullback down to much discounted prices before it potentially rallies once again. Okay. All right, we've got an alert kicking off on EU. We are getting a push higher. Okay. So even when we look at the likes of GU, right, again, we're still seeing a similar picture here, right, with this high here. Now, I do understand that we will probably get a short somewhere around here, 50% of that imbalance, but SL to be safe can be up here, but if you want to tie SL, you can definitely go for 10 pips, but to be safe, I would put it up here. Go for a standard 1 to 2 hour trade, nothing too complicated. Of course, you know, it can definitely drop down a lot lower, but that's what the setup there for GU is. Gold as well. Interesting thing about gold can actually give us a buy. We do have a session inside of here, right, that I really like for a buy. Okay, of course it's counterproductive to exactly what the DXY or the bias that we have for the DXY at the moment, but that's perfectly fine. Okay, as you guys know, gold is not always going to do exactly what we want it to do, and we are inside of this range from last week again, similar to most of the major pairs. Okay, so from looking at this, there is a potential for us to actually get higher prices on gold, but overall, when I do zoom out on gold, I'd still like to see gold drop down lower. Okay, last week we didn't quite reach our target from last week, which was Wednesday's low. Right, when we were sitting around this price point, we were looking for lower prices on the daily, on the 4 hour. It just didn't come. Okay, now we just have to take our time. Take it easy with gold in terms of what you're risking, because gold is definitely not something to play with, as many of you guys will already know. So let's load up the meta traders. Let's get up MT4, MT5s running. Guys, if you're watching the live stream right now, don't forget to leave a like on the stream, as I usually say to you guys if you're enjoying the stream. Yeah, it'll help with the YouTube algorithms of the channel. Alright, so for now, we're gonna watch quite a few of these pairs. I want to look at GU and the DXY. I want to see if we can actually get that move higher. Sorry, yeah, if we can get that move higher for the DXY. Okay, and what I'm going to do, right, is just take my time with the dollar. I want to see the dollar really punch into that candle there. I believe it's a half hour, on the half hour, before I execute anything on EU. So right now I'm just going to prepare my lot sizes. Should be pretty straightforward. What's this, 25? 25 pips.
I mean, if I'm the administration, I think the policy goal to say, look, we want to be the US content, we want to have that as high as
because to be honest, I do like gold for a buy, which is definitely counterproductive.
China and South Korea tariffs, and how does that factor in? But they do have domestic battery capabilities. But yeah, still Tesla is least exposed to the tariff headwind among all the OEMs.
Daniel, appreciate your time. Thanks for dropping by. Daniel Rusker there of Bernstein on the tariff situation. We're all looking for clarity. Maybe we'll get it in just a moment. We're 5 minutes away from a press briefing at the White House, where we're set to hear from the Treasury Secretary Scott Bessent alongside the press secretary Caroline Levitt.
You know, we've got this really nice session here, you know, which can give us a nice buy on gold. To be honest, it can give us a nice buy on gold. Maybe the buy on gold just takes out this morning's high, right? That does have potential to do that. But overall, I do want to see gold just keep dropping, at least for now anyways. Anyways, let's turn our attention over to EU.
It's a pretty aggressive timeline, let's put it that way. Up next on the program, a press briefing with the Treasury Secretary Scott Bessent, plus reaction from Kathy Bostjancic of Nationwide. From New York, this is Bloomberg.
All right. So right now we do have a little bit, like a teeny tiny bit, right, of diversion, aka one pair slightly lagging behind the other. So EU's already touched the hourly candle, right? But the dollar hasn't as of yet. which is okay. So what I'm doing right now is I'm holding off entering EU just for a second, but for some of my other accounts, because I can't, it's just annoying to trade them all at the same time, so I'm just gonna enter on one of these from now, just make my life a little bit easier. Now let me add to that. It's too small of a lot size. Cool. Alright, so I am starting to enter some of these EUs. Spread on that must be crazy high. Okay. So we've got a half-hour candle inside of there as well. See, now the one thing that I'm potentially trying to anticipate here, guys, is when you're looking at, let's say, EU, or you're looking at you're looking at a major in comparison to the DXY, right? Sometimes they're going to be off, right? So the dollar might just start pushing from here, and the let's say, for example, EU has already played into its specified area. It does that sometimes, you know. Sometimes EU will pull back into the candle and then the DXY won't, or sometimes the DXY will pull into the candle or tap into the candle and then EU won't tap into the candle, will just move off the imbalance. So sometimes you kind of just have to be on your toes really to react. But for now, we're not rushing. We don't really need to do much right now. I've only entered earlier because I do have 3 accounts I'm managing right now. Anyways, guys, if you're enjoying the live stream so far, don't forget to leave a like. Don't forget to leave a like. Make sure you guys are liking up the stream if you haven't done so already. Alright, let's take a look at gold really quickly. Okay, so gold is rebounding quite heavily. That's quite a candle there. That's quite a candle there on gold. Yeah, I wouldn't be surprised if gold actually takes out this morning's high. I wouldn't be surprised at all. I'm going to set some alerts for that.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The opening bell about 60 minutes away and seconds away from a press briefing at the White House with the Treasury Secretary alongside the Press Secretary. When the Treasury Secretary starts to speak, Scott Besson will take some of those comments for you right here now live on Bloomberg TV. Equity futures on the S&P negative by 1/10 of 1%. On the Nasdaq 100, we're down by 0.2 of 1%. Let's get you prepared for the opening bell with your morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. One of the biggest movers this morning was UPS, but it started to ease back on some of the gains. It's up now less than 1%, dropping its full-year guidance, specifically citing macro uncertainty. It's also undergoing a 20,000 cut of employees and try to right size as they're no longer taking as many Amazon shipments. Also on the move this conversation, we were just having a conversation about this, is GM. The car maker this morning also scrapping their full year guidance, saying that they would try to update the market once they have more certainty. Shares are down by 1/3%, also getting rid of their $4 billion buyback. Also postponing their analyst call. It will no longer happen today. It will indeed now happen on Thursday. Finally, away from earnings, HIMSS, the telehealth medicine company, surging in the pre-market.
Guys, don't forget to leave a like on the stream, yeah? Drop a like on the stream.
Specifically, HIMSS and hers is one of them. Also Row, also Live.
Yeah. If you guys want to take a short on EU, feel free to do so. At least for now, just take it easy, because like I explained to you guys, we're waiting for a test of this candle. But you know, if you just give it 25 pips, you know, we shouldn't realistically see this high get liquidated. So you should be all right. But if you do want to wait, I will let you know exactly when I do enter, because I'm going to go for a 2% risk on this trade.
A record $162 billion. The forecast was for $145 billion. Now, most of this came in consumer goods.
We'll see how it does. If it starts to progress and look better, then I'll up the risk on it. But for now, that's what I'm going for.
5%. Exports were up by 1.2%, and most of that was cars, as they tried to get cars off the lots and out to customers overseas before the tariffs begin. So that is a major number that will put downward pressure on first quarter GDP. Along with this, we get the wholesale inventories report. They were up 0.5%. Retail inventories, though, fell 0.1%. Now, this is a conundrum for economists because there should be an offset in inventories to all of these.
All right, so we slowed down a little bit.
Even though we got 27% more imports.
Do you think gold's probably keep pushing? No, gold's back down. Okay.
Nobody quite knows what's going on with that, but it'll be interesting to see how it all plays out tomorrow in GDP.
Mike McKee, thank you, sir, with the latest. More data coming later. Job openings, as Mike pointed out. You'll get payrolls later in the week. Consumer confidence coming later this morning, too, so look out for that as well. In a few seconds' time, we should have a press briefing with the Treasury Secretary, so when that room starts to fill out and the Treasury Secretary walks into the briefing room, we'll take that for you in just a moment. Also, all right, let's see. We are dropping a little bit more on the DXY. Waiting for a little tap. So, Money Day, guys, talk to me. Who's on the stream right now? How you guys doing? Are you guys in any trades right now? What setups do you guys have? Are you looking at gold? What are you guys looking at?
But it's a bit early to look for the real negative numbers in payroll, or the hit from the government layoffs and the hit to healthcare and even the cyclical sectors. I think that's going to be a few.
Even GU hasn't pulled up into the half-hour imbalance there as well, so I am being a little bit apprehensive and just taking my time. Where's AU? Yeah, even AU. Can you guys see how AU's got that high as well? That printed. AU's the most bullish looking pair out of all of them. To be honest with you, 4 hour looks pretty bullish on AU. Right, but I do think this can drop lower if you can take out these lows here on AU. There's a nice imbalance there as well. Mark says in the live chat, "What's good, team? What's happening, my bro? How are you doing? You good? You're in a gold buy just now. Okay. Yeah, I've seen gold. Gold does look like it can push up, you know. It does look like it can. I wouldn't be surprised if it does. Guys, if you're watching the stream right now and you're enjoying it, don't forget to leave a like on the stream. Guys.
Boosting the overall headline number.
Kathy, we're going to get a host of other data before that, including the JOLTS information, which includes the quits rate. We'll get some more consumer confidence, as John was just mentioning. I'm just wondering, from your vantage point, as you look forward, how you reconcile the gap that we have seen between the soft data and the hard data. Do you agree with some of the earlier guests on the show who said it's probably a 4 to 6 month lag before you see a similar type of deterioration in the hard data?
Yeah, I would agree with that. I mean, maybe I'd say a little shorter, 3 to 6 months, but by and large, the movement in the soft data has been so pronounced. You really be careful shrugging that off. Sometimes it can be a little bit misleading, especially the confidence numbers. But when you spoke about the Conference Board consumer confidence data, what I'm going to zero in on is all the labor market readings.
Let's see what we can get. Guys. Let's see what we can get. We're in our entry areas.
The labor differential, that I think is meaningful, and also consumers' expectations about income going forward. Usually that survey shows is very
for gold, maybe Mark, I don't know what your bias is, but it could be in gold short term. Because overall I do still see gold dropping lower.
Current consumer spending.
But at the moment, we do see consumers also front-loading, wanting to get ahead of the tariffs. What does this mean for spending at the second half of the year, Kathy?
So the data are very skewed by the tariffs. You were talking about, Mike was talking about the import data. yes, imports going to drag on
I like how
GDP.
we've stalled once we headed it into
Consumption
that
is going to
hourly
keep it
candle.
elevated more than it otherwise would
You
be.
know,
So
I am
you'll see
contemplating
growth
taking an entry, to
will
be honest with
lower
you
because
guys.
there's just a lot less
Well,
consumption.
taking the main
And
entry, should I
even
say.
regardless of what happens on the tariff front, like even if they're resolved, if you bought an auto or a big ticket item, you're not going to be buying one in the second half of the year. So that's certainly going to be a negative for consumer spending and GDP growth in the second half of the year.
John has brought up this point a lot. If you're going out and you're spending on big ticket items, say a car or some sort of SUV,
You know what? Here's what I'm gonna do.
About losing your job?
I'm gonna half my risk now,
Well, that's a great question. I would say no.
and then enter the other half if we
Right
start
now,
to
I
head
think
higher
people are just
into
trying to get ahead
the
of the
the,
price
the level.
increase. I think if you're worried about losing your
What's
job,
my
you probably hold on
spread?
to your current car and just run it as long as you can, or look to the used car
Okay.
market, which that's also
Spread's
going to
not
feel
bad.
upward pressure, right?
Spread's
And prices,
pretty
we
good
saw that
actually.
during COVID. So I think that's a really good point. And even in our outlook,
I do think we're
and
gonna
as in
get
the
a
vast
little bit
majority
more of a
of
push up.
others I've seen, it's going to either be a borderline recession, or if we get a recession at this point, most of us thinking mild, that means the unemployment rate goes up to 5%. That's still overall historically pretty good labor market, but it's this uncertainty that is really, I think, killing the economy right now.
Kathy, as we've seen, the chairman of the Federal Reserve has chosen to prioritize anchoring inflation expectations. I just wonder from your perspective how you imagine that might shape his approach to next week's meeting.
Yeah, he is going to have to walk a tightrope as many times he does, especially during the press conference. But I don't think he'll back away from that. I know some others have suggested
Alright,
a little
GU
more
is heading
dovish,
higher.
right? Some Fed officials, but I think he'll maintain this idea. Inflation expectations high. The worst outcome for them is it becomes embedded and becomes more persistent. One of the things I worry about is the rollout of the tariffs. Like, we're still waiting to see if there's going to be additional sectoral tariffs.
Nice.
The longer that process gets
Alright, dollar's
elongated,
dropping
the
some
more
more.
inflation shock can be
I
persistent.
think gold
right?
should be pushing a
I'd
little
almost
bit.
rather have all the
Yeah, a
tariffs at
little bit.
once. I mean, it's not good for the economy, but in terms of inflation, it is really hard to gauge then what's transitory versus persistent.
Kathy, what's your take on some of the pressure that's come from the president on the chairman of the Federal Reserve? How does that reshape the optics of them trying to ease sometime soon?
I think
Nice, that's the blip I'm looking for on EU.
ignores that, and they're apolitical, and they're only looking at the data.
That's
and
the
I
blip
think,
I'm looking
by and
for.
large, that is the case. I just worry a little bit about
Alright,
the
I've halved the
for
position on
market
EU.
and
Just taking the short.
how they interpret that. And it could be that, they ease for the right reasons, but the market second guesses that. And that would be bad, right? And then you could have long-term interest rates rising while short-term interest rates are lower because of inflation.
Right, so right now, what I'm looking at,
Embedded on the long end.
right, we'll probably get EU pushing a little bit more into drawdown. Right, we do have other areas inside of here. Okay, we got this 5-minute imbalance. We can definitely reach a little bit higher into it for sure.
When can they get to the pro-growth?
But dollar's now hitting all the targets.
The uncertainty that companies are facing, and can he give some sort of reliable guide in how they are going to get this through before?
So, for example,
Independence Day, given all of the dissent that we're seeing in Congress,
if we get an entry somewhere around there for a short to the high,
today needs to first
what is
do
that?
two things. One, show that
21,
optimism,
okay.
getting trade deals done with these partners. He's talking about India, he's talking about South Korea. Second, try to push the conversation forward when it comes to taxes. But can this actually get done on the timeline he wants?
Okay, so that's what I'm working with so far. The stream. We'll see how that progresses. There is a lot of chop inside of here, but we're gonna play the analysis from earlier. Okay, we're gonna play that. Gold's having a pretty decent bounce back. Gold's having a pretty decent bounce back to the candle low. That's about, let's say, 65, 70 pips.
And how significant would those deals be to ratchet back some of the concerns that we're hearing?
Yeah, I do like Gold's buy, to be honest. I do. But then you ask me, why are you short in EU? It's just something, a setup that I had prior to all of this happening, right? So essentially why I'm doing it is just playing the setup that I had earlier on in the week before market opened and whatnot.
make a point person. Every time
So
the administration, they say there is a
I'm
point
definitely
person,
gonna play that.
Donald Trump.
If I get it wrong, I get it wrong, but I have to follow my own setups.
General Motors, a perfect example.
Alright, so now EU just pushed up into that imbalance. We're getting a pretty strong rejection, or a strong push higher right now. Right, so I'm looking to add that other 1% to the trade, but I'm gonna hold off just a little bit.
Without getting that detail.
And there was a shift where they removed any clarity after hearing about those potential exemptions. GM is not alone when it comes to withdrawing guidance. Just this morning, we also had JetBlue withdrawing their guidance, Pfizer, UPS. It's not just the auto manufacturers. At what point will their pleas have the same sort of power that maybe the Walmart and Targets of the world did just last week?
And Daniel made a great point. This is a reprieve on parts of the tariffs. This Saturday, we're supposed to have the auto parts 25% take hold. What the administration is saying, well, also if you're paying aluminum or you're paying steel tariffs, you don't have to be doubled up. We're not going to double tax you. But since April, there has been a 25% tariff on autos writ large. And this is why the auto industry is struggling.
Alright, we want this high to hold. We want this high to hold. So let's see what happens. Again, there's two things that can happen here. This low holds for the DXY, or we push down lower into this original area, right?
Well, it's something that's definitely on the
So far, we're in, well, how much drawdown is that? We're in a little bit of drawdown. What's that, like 10 pips? No, 6 pips.
They say it's one of the most protectionist places for US autos to actually.
Let's see. Alright, GU's now inside the imbalance there. It's a very strong push in EU right now. Really, really energetic push higher.
And reaffirmed guidance and talked about exceeding profitability because they produce a lot of their goods locally.
Let's see if gold's reacting.
Will it have exactly the effect that people are
I mean, gold is still heading higher, but nothing much just yet. AU's also pulled up into that imbalance.
The risk is it takes too much time, and you're already seeing the cracks emerge. The trade between China and the United States.
It's a very, very strong push.
Is that transport and trucking breaks down next? Excuse the pun.
Alright, so now we're deep inside of that hourly candle. We've got to hold here. If we don't hold here, then we're pushing higher. Right, if we even look at the flip side of EU, we've also got that hourly candle up above as well. So we can head higher, but I would like to start shorting from here. Mark says, what are you expecting from the news at 3 p.m.? I mean, let me see the news. So we've got the consumer confidence and JOLTS openings. So Bloomberg is currently talking about them. I'm not really expecting much because that's not going to be the main driver for this week. Of course, we've got NFP. That's going to be the main driver for the week coming. This is a huge push. Alright, so it does look like we will get tapped out of EU. This is a very, very huge candle.
They end up digging in. Look, we talked a lot about the so-called Trump put. The strike price was a whole lot lower than people thought it was only a few months ago. But the pressure comes from.
I do want to stick with it though. I do want to stick with it. Like,
if you start to see rising unemployment,
I do want to stick with it.
Because of the policies announced in the last few months. That's the question.
The only thing is, I don't want us to hit stop.
If one starts to infect the other,
right, hit stop on EU because there's a slight difference.
To look at each individual Congress member at town halls, at how they're responding to potentially pushing back against the president at a time when you really
What's
see
Bitcoin
him
doing?
whip, right, for a lot of congressional
Yeah, Bitcoin needs a drop as well, to be fair with you.
About the breaking point at a time when it's not the stock market, maybe it's the bond market, but the bond market.
Let's see, we've pulled up quite deep, or we've pulled down deep into that hourly candle there for the DXY. Right, we've got a new 15-minute candle that's just opened up right now. So let's see what that 15-minute candle wants to do.
Deeply unpopular the tariffs have been. 39% of respondents agree with the rollout.
You know, what we would like to see is this just be a very, very wicky hourly candle. And we start to flip bearish.
Because they believe they'd be pro-risk, pro-growth. Yes, should accept some tariffs, but the fuller platform would include some tax cuts. We've had to wait longer.
Okay,
for
even if we hit
uncertainty to
stop
start than we thought it
with
would
this trade,
only a few months ago.
you know, my bias for the week still stands as long as we don't break structure higher.
Said was likely given the fact that that was something that the president could do unilaterally. Has led
Okay,
to less
GU's
agreement
pulled
on
up
Congress
as
members
well.
to get through some of the tax cuts passed, and all of a sudden
Let's
there's a
see.
question of how much
Like,
further goes
realistically,
cutting
you know, a
taxes
part of me
offset
does want to close the
maybe some
trade,
of the drag that you've seen from
you know, to
tariffs.
cut the losses short, but
Following comments from
I'm just
the
going to let this play out.
we can take a listen to some of the
Right,
questions
GU
and some of the
is,
answers
sorry,
from the
EU
Treasury
is in a
Secretary
little bit of
Stephen
drawdown, but
speaking to
GU's
the
now
White House.
just gotten into entry. AU's also just now got into entry as well. Right, you know, across these other pairs, these are not terrible areas to go short from. However, I can't deny the fact that if I look at GU over here, okay, so the long for GU is not as clear, but I do like this for a short. So let's see. Let's see, maybe it's potentially we just get a slight move rather than a maintained or sustained move. So let's see.
And I think there's a very good chance that we will see this in the
Looks like dollars faltering.
The president campaigned on no tax on
That
tips,
1 minute
no tax on Social Security, no
looks
tax
pretty
on
bearish.
overtime, and the restoring interest deductibility for autos, for American-made autos. So tariff income could be used for tax.
Let's see. I want to see some bullish candles. Some bullish candles. That's what we need right now, dollar.
Is a role for significant tariff revenue in U.S. fiscal policy?
I think that it is something that got put away a long time ago, and I think that tariffs will bring back American manufacturing and generate substantial revenues.
On manufacturing, we've seen some pretty grisly surveys this month from the Philly Fed, which saw the biggest drop since May of 2020, and the Dallas
All right,
Fed,
dollar's pushing up a little bit now.
plunging outlook, poor shipping orders.
You know, I do have a slight concern that this is just a pullback on EU to just head higher.
I think I was in the investment business 35 years.
So let's see.
The survey data and look at the actual data, and the actual data has been quite good. The job data is good. Americans keep spending, and as Caroline said,
I might even take a
to bring manufacturing back on shore.
short on GE, you know.
Investments by domestic corporations and foreigners who want to come into the U.S.
Thank you so much, Caroline. Thank you, Mr. Secretary. The Chinese continue to say that the U.S. and China are not engaged in any consultation or negotiation on tariffs. You recently said you've talked to your counterpart, but more about, quote, traditional things like financial stability. So can you clarify, is the administration talking to Beijing specifically about tariffs or not?
Well, we're not going to talk about who's talking to whom, but I think that, you know, over time we will see that the Chinese tariffs are unsustainable for China. I've seen some
Oh my goodness, what have I just done?
over the past few days.
That
if
was
these
scary.
numbers stay on, Chinese could lose 10 million jobs very quickly, and
Boy.
even if there is a drop in the tariffs, that they could lose 5 million jobs. So,
Anyways, what alert just went off?
we are the
Dollar.
deficit country. They sell almost 5
Yeah.
more goods to us than we sell.
I'm not
to
confident on the
them.
dollar giving us a
So
push up
the
at
onus
all.
will be on them to take off these tariffs. They're unsustainable for them.
And they are saying you guys are not talking about it. So is that true?
Look, they have a different form of government. They're playing to a different audience. So I'm not going to get into the nitty-gritty again of who's talking to whom. But as I said, I believe for the Chinese, these tariffs are unsustainable.
And very quickly, 2 days ago, you said you didn't know if President Trump had spoken to Xi Jinping. Do you know now?
Again, I would say Caroline and I have a lot of jobs on the White
Yes,
House.
Money Day gift. How you doing, bro? You good?
Wilbert, go ahead. Secretary Bissett, thank you so much for being here this morning.
What's gold doing?
Talked about the importance of getting
Yeah, gold looks like it's gonna rally, man.
when it comes to the market, yet the Trump administration is
Gold does look like it's gonna rally.
several complex trade deals.
It's chopping. It is chopping a lot. It is chopping a lot, but it does look like it's gonna rally.
Uncertainty around
Even when you look at the GDX, gold, oh, gold is down pre-market. Okay, that's interesting.
Good question. And I think one thing that has been a little disconcerting for the market
GDX is high, boy.
President Trump creates what I would call strategic uncertainty in the negotiations. So he is more concerned about getting the best possible trade deals for the American people. You know, we had 4 years of bad deals for decades of unfair trading, and you know, we are going to unwind those and make them fair. What we are doing is we've created.
It looks like we'll have to just wait for the new hour candle to form, you know.
Uncertainty will be narrowing, and as we start moving forward, announcing deals.
I'm looking at GU where it's currently sitting.
But you know, certainty is not necessarily.
I kind of want to see a little bit of a, you know, a reaction.
Sort of walking back a little bit on the auto tariffs. Can you sort of just elaborate on that decision there and what we can expect going forward, and why sort of the shift in those auto tariffs?
Well, President Trump has had meetings with both domestic and foreign auto producers, and he's committed to bringing back auto production to the U.S. So we want to give the automakers a path to do that quickly, efficiently.
And you know, to be honest, you know, the move higher that we've had on the EU is not the best. It's quite energetic to the upside.
Anticipate supply chain shocks or supply shocks coming now that
It's really, really energetic. You know, once we reach this low, whoosh, right? We just pushed. Got a slight reaccumulation here, then we pushed up again. Right, obviously this is not a sign of, you know, price being bearish at all, not in the slightest.
But definitely weekly, and they know that President Trump
So
is committed to fair trade and have planned accordingly.
And then second question, can you outline the timeline for when you think some of these deals, particularly with your Asian countries like India, Japan, South Korea, you may have an announcement?
see, we're holding out for that hourly candle, it looks like.
Trading partners and allies.
Right, within this next hour, obviously we've got NYSE. We're gonna see if we're gonna hit stop, or we're gonna fly down to one of these TPs. But right now, just it's not good. It's not good at all. Being completely honest, it's not good.
Some announcements on India. I can see the contours of a deal with the problem.
Like we're about 3/4 into the stop right now. Dollar is continuing to drop down lower as well.
Secretary Besson, just continuing on the path of the sort of like progress.
Yeah, dollar's dropping lower. Okay.
I think that it was could happen as early as this week or possibly next week. Can you give us a bit of a timetable? And then
Alert on gold. Gold pumping. Those buys on gold coming through. That 5-minute candle. Yep. For sure, for sure, for sure.
Are domestic factors complicating your efforts? Canada just had an election. You know, are you seeing that you might have to think about delaying the 90 days?
Well,
All right, so
the opposite tack that I think from our talks that
it looks like we're wrong on this one.
want to have
A very, very strong move to the upside.
before they go into elections to show that they have successfully negotiated with the United States. So we are finding that they are actually much more
Very strong move to the upside.
Get this done and then go home and campaign on it.
Sean, I'm sorry, did you have a comment on whether it's something could happen this week or next week?
I'm gonna wait till that hourly candle.
Again, I think that we are.
I'm gonna try and hold on.
India, and in India, you know, just a little inside baseball. In India, in a funny way, is easier to negotiate with than many other countries because they have.
All right, cool. So is anyone else in any other trades,
So it's much easier
or we're just looking at the majors right now? Because this is not playing ball right now at all.
unfair trade deals that have been put in over decades that the non-tariff trade
It's giving very much 50-50.
more insidious and also harder to detect. So a country like India, which has the you know, posted and ready tariffs, it's much easier to negotiate with them. So you know, I think the India negotiations are moving well.
Sean, go
Hi, Mr. Secretary. So it was reported this morning that Amazon will soon display a little number next to the price of each product that shows how much the Trump tariffs are adding to the cost of each product. So isn't that a
perfect, crystal clear demonstration that it's the American consumer and not China who is going to have to pay for these policies?
I will take this since I just got off the phone with the president about Amazon's announcement. This is a hostile and political act by Amazon. Why didn't Amazon do this when the Biden administration hiked inflation to the highest level in 40 years? And I would also add that it's not a surprise.
How many people do we have on the stream right now? Let's see.
Amazon has
Okay.
a Chinese
We've got a few people in here. Well, anyone else looking at any other pairs? You know, I know some of you guys look at GJ, some of you look at what else do you guys look at? Some of you, I think one guy must have said UCAD one time. It does look like we are offside with this trade here. It does look like that so far. Looks like new hours we're just gonna keep pushing.
Yeah, I would also add that
So we're gonna have to look at higher areas
has been a priority
for today.
for the first 100 days of the Trump administration, and President Trump has done a
Yeah.
job of leading that.
All right, so stopped.
Interest rates, mortgage rates are
Officially.
down. Gasoline and energy prices are down.
Officially stopped out on those EU shorts.
And as Caroline said,
all right, so the week is still fresh. The week is still young. Let's see how this goes on for the rest of today. We've still got NYSE open. So if we actually get EU higher, I'd still anticipate taking another short. That'll be the last short or the last potential trade for today.
Peace deals, trade deals,
so let's see.
Tax deals, and deregulating. And the deregulation is a longer.
That low's just being wiped out now.
The third and fourth quarters, that's really
Gonna move this alert here.
Thank you, Caroline. A question for
Yeah, we've just wiped out that low. Okay.
We talk a lot about volatility and uncertainty in the marketplace.
So right now, I'm going to be neutral. I'm going to be on the sideline for the dollar until we can actually get lower prices. Okay. Get to around 98.86, 87 level. And we can take a look at another potential trade. Gold at the moment, like I said, gold did look like a pretty decent buy earlier. It is giving a reaction. Target for that is going to be this London sessions high. Looking at it from the lower time frames, it does look very progressive to the upside. So if you are in a gold long, I'd recommend you probably stay in there for at least till 33.16 highs. Okay. For now, we'll look a little bit at gold. We'll look a little bit at EU. Set some alerts for EU as well. We'll see if we can get a move on that if price wants to get high enough.
As for the fair trade deals the president is trying to negotiate, he's not just righting the wrong of the mess that he inherited from the past 4 years of the Biden administration. This is a mess that has been created for the past 4 decades, that has sold out the middle class, that has moved jobs overseas. You think about our heartland, middle America, what towns used to look like, what they look like today. President Trump wants to restore the golden age, and it's a process to do that, and that process is underway. But he's put.
All right, new hour candles here.
Trade team, Secretary Bessent, Secretary Lutnick, Jamieson Greer, all working incredibly hard.
New hour. Guys, if you're enjoying the stream so far, don't forget to leave a like. Yeah. Don't forget to leave a like on the stream. It does help with the YouTube algorithms. Yes, we have taken the L on EU, but it's not the end of the world. It doesn't mean you leave thumbs down. It's all part of the process. That's part of the reason why I do this live. You're going to see the wins. You're going to see the losses. It's all part of it.
Is going much better than I would have thought when I took office on January 28th. And that's through President Trump's leadership. That Speaker Johnson, Leader Thune are united.
How was everyone's weekend so far?
Yesterday, with
well, not so far. How was everyone's weekend? Full stop.
Kevin Hassett, myself, Speaker Johnson, Leader Thune, Committee Chairman Jason Smith, and Senator Crapo. And the tax bill is moving forward. It is going to give permanence to.
How was your weekend, guys?
2017 Tax Cuts and Job Act, which will, back to the question on certainty, it will give American business certainty, it will give American people certainty, and then President Trump is also adding the things for working Americans that is talked about earlier: no tax on tips, no tax on overtime, no tax on Social Security, making auto payments deductible. So that will substantially address the affordability crisis. And the other thing that I would note, and back to data, is that the Vanguard, one of the largest money management firms in America, said that over the past 100 days, 97% of Americans haven't done a trade. And in fact, individual investors have held tight while institutional investors have panicked. So individual investors trust investors trust President Trump.
Megan, in the back.
Can you detail for us exactly what we should expect as far as relief on the auto tariffs front? And then further, Mr. Secretary, should we expect other industries to also get relief the way we've now seen for auto and tech as well?
I'm not going to go into the details of the auto tariff relief, but I can tell you that it will go substantially toward reshoring American auto manufacturing. And again, the goal here is to bring back the high-quality industrial jobs to the U.S. President Trump is interested in the jobs of the future, not the jobs of the past. We don't need to necessarily have a booming textile industry like where I grew up again, but we do want to have precision manufacturing and bring that back. And another important, very important function of this that does not get talked about enough is national security. President Trump.
Gift says, calm for me, bro. Not took any trades as of yet so far. Okay.
Belief is that economic security is national security. National security is economic security.
There's some key areas for most of the majors. So even gold, there's liquidity above, there's liquidity below. It's literally typical conditions of NFP week. Literally typical NFP week conditions.
Of making trade free and fair and remedying this gaping national security hole that he was left with.
I would just add, Megan, the president will sign the executive order on auto tariffs later today, and we will release it as we always do. Go ahead.
Secretary, any updates on the negotiation with the European Union, and is it hard to negotiate with the European Union?
Pardon?
Do you have any updates on the negotiation with the European Union?
I'm more involved in the Asian negotiations. My observation goes all the way back to Henry Kissinger's statement, when I call Europe, who do I call? So we're negotiating with a lot of different interests. Some of the European countries have put on an unfair digital service tax on our big internet provider. France and Italy, other countries, Germany and Poland don't have that. So we want to see that unfair tax of one of America's great industries removed. So it's going to be a give and take. So they have some internal matters to decide before they can engage in an external negotiation.
Edward.
Thanks, Caroline. Mr. Secretary, so contacts I have in the business community say that they're basically frozen for long-term investment because of the uncertainty around tariffs. How long do you think President Trump has to make a deal before there's damage to the economy?
Look, I think that what we're seeing is that business leaders, they've gone into a pause, and I think we're going to give them great certainty on this tax bill. And I think over the next couple of weeks, as I said, we have 18 important trading relationships. We'll put China to the side. 17 are in motion. And then, as I said yesterday, I think there's a very good chance we're going to get this tax bill done. And the tax bill is going to be very powerful for domestic U.S. investment. So what we are going to do, one of the most powerful parts of President Trump's 2017 tax bill was full expensing of equipment.
Okay.
We are going to make that.
We're just on the sidelines right now. We're just watching price a little bit more.
That will be retroactive to
the main thing that we're waiting for now is NYSE open to see if that's going to give us anything. GU is still active in its trade, right? The setup is still active for GU. That can still drop. EU can also still drop, unfortunately. Right, but we are looking for EU now to head higher before we look at another potential short.
The president said that world leaders would like to meet with him in Rome, in Vatican City, about trade. Other than President Zelensky, who did the president meet with? And about trade, and when could we get some of those deals?
The president met with President Zelensky, which we talked about, and the president continues to be engaged with his fellow leaders around the world in the European Union. You've seen many of them visit the White House. I want to harp on, in closing, the point the Secretary just made. On the campaign trail, the president promised the American public that he was going to make America the best country in the world to do business again. The lowest taxes, lowest regulation, lowest energy costs of anywhere in the world. And if you do business in the United States, you won't pay a tariff, you won't pay a price. That's not just good for companies around the world, but it's good for the American worker. That's what this team is focused so hard on every day. We have work to do. The golden age of America is underway. But as I pointed out in the beginning, there's a lot of reason for the American consumer, the American CEO, the American small business owner to be confident and optimistic about this president and where we're headed. So you will hear more from the president himself later this evening. He is traveling to Michigan, as you all know. He'll make a stop at the Air Force Base with Governor Whitmer, and then we will head to a rally tonight where you'll hear more from him directly. So we'll see you in Michigan. Thank you, guys.
Thank you. All right, Treasury Secretary.
All right, gold's rising. Gold is rising. Gold is rising with some energy. We've just hit the highs there, those equal highs resting above. We just tapped into it.
Let's take a look at what markets were doing during that press conference. You have S&P 500 futures at their lows right now. Besson said that he won't comment on who was talking to who when it comes to China. He did say that the U.S. has had substantial talks with Japan, that they're very close to a trade deal on India, but we have to talk about Amazon here. This was really interesting. Punchbowl reporting overnight that Amazon will soon display the added cost of U.S. tariffs on individual products. Again, that is according to Punchbowl. You can see shares are down about 2% right now because Caroline Levitt said that this was a hostile and political act by Amazon. Shanali.
Yeah, very interesting and targeted comment, of course, by the press secretary. We're going to bring in Bloomberg's Tyler Kendall. She is in Michigan. This is where President Trump will hold a 100-day rally tonight. But first, let's talk a little bit more about the direct reaction. Of course, they talked about tariffs, they talked about taxes, and they talked about Amazon specifically. What does this say about the White House's reaction to companies around the push-pull with these tariffs? Prices are going up. Amazon might start to sit here and tell you just by how much. The follow-up question, Tyler, was...
You know, this is one of those conditions where, you know, you can start to get really frustrated. Of course, you know, the dollar, or EU, shall I say, hit stop loss with literally, let's say, 2.5 pips, right? And now it's literally coming straight back down to entry, right? GU, on the other hand, is still active and running. And AU, oh my goodness, look at AU, guys. Look at AU. AU's dropping like it's hot. Right? It's annoying. Sometimes this happens and there's not much you can really do about it, because let's just say you're someone that trades GU. You enter GU, you haven't hit your stop, and you're barely in profit. Let's say someone like me who looks at EU, right? I took what did I take? I took a short on EU. It's all the way up here. It's hit stop. But then if you are fortunate, you're someone that traded AU, you've been in profit for ages. Right, you've been in profit. This is part and parcel with the whole thing, where it's like you just got to understand that it's just probabilities, guys. Sometimes you're gonna have a setup, you take it, hit stop, goes into your direction anyways, right? It just wasn't your day that day. It just wasn't your setup that time. So you can't shy away from taking the next trade setup that comes through, right? So with this, you know, it's a little bit annoying for me and for anyone that took this with me, but it is what it is. Because AU looks like it's going to keep on dropping. Set alert for that. Gold has been pushing up as well.
To show consumers that information. They also don't want that to happen with cars, right? Because if you stack tariffs 25% on 25% on more for parts, you're going to see auto prices rise by maybe more than half.
Right, exactly. And it's also, I think it's fair to say, this is also part of why we're starting to see the administration really focus in now on its tax plan, since the White House is really banking on getting that through as soon as possible to get more cash into consumers' pockets and quickly. You had the Treasury Secretary there saying that they think that tariff revenue could actually help to offset some of the bigger tax priorities. We should also note it's unclear how exactly that would happen, considering that the tariffs aren't codified by Congress. They're not going to be in the Congressional Budget Office scoring, which could kind of complicate the math here. But Treasury Secretary Bessent yesterday came out saying that they actually want to see reconciliation done by July 4th. That is considered to be a very ambitious timeline. Senate Majority Leader John Thune said that it was aspirational. Instead, they're really looking towards that X date as the hard deadline for lawmakers to get the reconciliation package through. I did speak to one senior aide to Senate Republican leadership who told me that the chamber really isn't expecting to complete any work on this till actually August. So the administration, though, really pressuring lawmakers. I can tell you actually one other thing, Matt. President Trump told Michigan Republicans who were supposed to be here tonight not to come, to stay in Washington, because that is the sense of urgency this White House is pushing lawmakers to get through their tax agenda as they deal with the fallout from consumers and retailers alike when it comes to their tariff plans.
Certainly a sign of the times there. Bloomberg's Tyler Kendall reporting from Michigan. Looking forward to your coverage all day long. But let's keep the conversation on autos going, because GM suspended earnings guidance and froze plans to buy back $4 billion in shares due to uncertainty around tariffs. Bloomberg's David Welch is our Detroit bureau chief. He joins us now. So that's just part of it, David. They also postponed their earnings call from today to May 1st because they simply don't have enough clarity right now. And I guess it remains to be seen whether they'll get that clarity by the start of May.
That's right. They're looking for some kind of detail. I think last night they were preparing their earnings, the press release, the numbers, everything like that. And there were news reports breaking into the evening that Trump was going to give some sort of relief on auto tariffs. There's still no detail out there, or at least not a lot of it, on what that is. So it's tough for GM to affirm, not affirm, or even update their guidance. So they suspended that. They had a $6 billion share buyback that they had announced in February. $2 billion of that is already funded. That was the accelerated plan that's supposed to be completed in the second quarter. So the money was actually sent to the banks. That's going to be done. The other $4 billion that didn't have any kind of end date on it, it could theoretically even stretch into next year. But that's what's being sort of indefinitely held until they have clarity on tariffs, what that means for profits, what that means for cash flow. And I think GM's like a lot of companies right now, where they don't know how to plan a business because they don't know about all the devils and the details of the trade policies.
It's not just American companies, it's European companies as well. Matt knows I really want a Porsche. And maybe it might be more difficult to buy one, but they actually cut their profit outlook because of these tariffs. What to make of the international car industry right now based on what they've said?
Look, it doesn't make sense to have one small Porsche plant in every market where you do business, right? Because even though people really like these expensive sports cars, you just don't sell enough of them to have a big plant in America, another plant in China or South America or wherever. So you have to do a lot of exporting if you're a niche car company like that. And I think what they're saying is they're not sure what tariffs, whether they pass along some of the cost to consumers or eat some of it, what it's going to do to their business. So yeah, it's going to weigh on Porsche's profits.
Still waiting. We're just watching price right now. We have to wait 15 minutes for NYSE. It's a little bit boring, but we just got to sit through it.
You also have 125, but people who can afford those cars didn't get that wealthy by giving their money away. So everybody is price sensitive to some degree.
If you are getting a Porsche for $100,000, then you're not getting a 911. Which means it's probably not
Gotta
made
buy
in
it
Stuttgart.
used.
David Welch, very good point.
Gotta buy it
people
used.
forget, used cars, great choice. David Welch out of Detroit, where he is our bureau chief and wrote the book, literally, on Mary Barra and General Motors. Now, UPS is among the big earnings movers today. Another one that pulled its guidance. Let's get the details from Bloomberg's Red Brown. So, Red, this is one of many companies this morning that have said we can't give guidance, we're flying blind.
Yeah, I mean, it's to kind of what David is speaking to there. It's really difficult to plan, make a business plan when you don't know how things are going to look within a week, right? So let alone months out towards the end of the quarter. So even UPS, with so many tentacles stretched so far across the economy, getting so much real-time data, can't really plan out what they think the rest of the quarter is going to be, rest of the year is going to be. We are getting some of their second quarter guidance coming through right now. So the company's saying they expect to get 21 billion in the second quarter, estimates calling for around 21.1 billion. So still right in line with what the expectations were, but still the rest of the year is still kind of a big question mark.
They also have plans to cut 20,000 jobs this year, UPS. That is due to reduced shipments from Amazon. So that was
by
really
more than
interesting
half.
as well.
That plan announced earlier, but by more than half, they want to cut shipments for Amazon.
They're also going to close dozens of facilities. But let's keep the theme going, flying blind, not literally when it comes to JetBlue, but they did pull their guidance.
Yeah, they did, and kind of, I guess, probably expected with them. Delta, American Airlines, Southwest all either withdrew or declined to reaffirm their outlooks this quarter already. So, JetBlue is already a company that's struggling. Another one of these companies going in the midst of a turnaround while the economy is struggling. And then, again, demand is just not necessarily there for air travel.
But maybe sea travel. You see Royal Caribbean hiking their outlook. Something I realized just a couple weeks ago, there was a great Wall Street Journal story about Coke versus Pepsi. Coke actually not making their concentrate out in Ireland and therefore maybe benefiting. Are we seeing that in their outlook right now?
Coke makes it obviously here, top secret in Atlanta. That makes sense because it's an American company, right? Pepsi. The weird thing is that Pepsi makes their formula in Ireland.
Right. And it used to be an advantage, but maybe not today.
Yeah, no, it's interesting because it's like, these companies that are so multinational, some people were worried about them being more exposed to the tariffs, right? If you're shipping things in from all over the country, it seems obvious. But for Coca-Cola, it seems like they had a really strong quarter. It seems like people are still buying their sodas. So yeah, sales did fall slightly from last year, but the company has really strong pricing. Price mix was up 5% in the quarter, 9% in the quarter before that. So the company still is able to charge higher prices for their sodas.
When it's addictive, it's pretty easy. Your pricing strength is increased when what you sell is addictive, right?
Yeah, absolutely. People like sugar. People like soda. Red Brown, we appreciate your roundup as always. Matt, you brought up this point. You take a look at the year-to-date chart of Coca-Cola versus Pepsi. It's pretty astounding. You have Coke up 16% on a total return basis. You take a look at Pepsi, down 11%.
Look at that. Joe pulled up the chart on the
Talk about a pair
He's so
trade.
fast. And Joe, by the way, if you look at that, if you look at it over 1 year or over 2 years, it's equally bad. Pepsi has really underperformed Coca-Cola.
You know what's up 36% on the year? Celsius, out with the new cherry cola flavor. Just saying, if you want to talk about addictions, I've got one.
Let's also take a quick check on the overall market right now because we're sitting at session lows when it comes to futures. The S&P 500 down 0.5% right now. We know a lot of that pain is coming through with big tech, with Amazon, a hostile act, as the press secretary of the White House said. We'll continue to follow these markets up next. This is Open Interest.
Alright, so the dollar has just pulled back right now. On the M5, we've had a pullback there, and we are now stretching lower on the DXY, okay? So it does look like we will reach lower for that hourly area on the DXY, and we can look to take potentially another position from there and see how we progress once we get to that high. So far, I don't like the price action that we're getting, as if, I am looking for shorts. I shouldn't be seeing any sort of progressive highs, higher lows being created, right? So, i.e., if we look at this low that sponsored this recent high, essentially, but what we've done is we've had a pullback. Hold on. Let me use this here. Essentially, all we've had. Okay.
Bringing you up to the minute
we've had a pullback down into this 4-hour candle, and we're potentially creating a new 4-hour high, which is where the hourly candle lays, right? Now, the probability of us actually getting a short, which now engulfs not only this candle and drops a lot lower, is very low. Okay, so I don't like the price action that we're getting right now, but we'll try to work with it. AU's just had such a crazy turnaround as well. Okay. So far, we're still gonna sit on the sidelines for now, wait for NYSE, and then we'll go from there.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's turn to healthcare now, because Hims & Hers Health is absolutely flying right now after announcing a partnership with Novo Nordisk. Novo will be offering its popular weight loss drug Wegovy through Hims and other pharmacy platforms at a reduced price. Let's talk about it now with Bloomberg's Madison Moeller, who reported on this. And Madison, I get why this is great news for Hims, but why does this make sense for Novo to go this route?
Yeah, so this makes sense, especially right now, because we are coming up on the end of the compounding era of weight loss drugs, which we've talked about on the show. You know, during widespread supply shortages last year, these compounding pharmacies sort of teamed up with telehealth companies to sell cheaper knockoff versions of blockbuster products like Wegovy and Zepbound through these telehealth platforms. And we're coming up on the end of that because the drug makers can now supply enough of their drugs to satisfy demand for the market. That means the FDA is going to start cracking down on some of this compounding, potentially leaving hundreds of thousands of patients that have come to rely on these cheaper drugs without access to medicines. So Novo, I spoke with them, and they, have been looking at this and making sure that they are there to step in when patients are eventually cut off from the drugs. They rolled out this cheaper option for Wegovy last month, and now they're expanding that to partner with these telehealth companies that have sold these compounded drugs in order to potentially reach more patients.
Madison, it is much cheaper, right? It's less than half of the cost of otherwise getting Wegovy in America, but it still costs like a car payment. And if you look in other countries, admittedly, this is data from 2023, but you can get this stuff for $100, even less in some places a month. These companies have always told us it's because of the middlemen that their prices are so high in America. But does this really pull back the curtain on that argument?
A little bit. I mean, this does show, because what they're doing, you're right, that this direct-to-patient or direct-to-consumer option is cutting out the middlemen in some cases. And so we're seeing a reduced price that maybe lines up a bit more with some of the discounts and rebates that insurance companies are getting on the list price of the medications. That being said, it's still, even at this reduced cost, a lot higher than it is in other countries. And that's something that lawmakers like Bernie Sanders really called attention to last year. The CEO of Novo Nordisk testified at a Senate hearing about the prices of his company's drugs. That's something we've also actually seen President Donald Trump call out this year, the fact that Americans pay much higher prices for medications than elsewhere in the world. So that is something that there's been a lot of focus on, and Novo has tried to reduce that price and that criticism by bringing down the cost of their medications, but it still doesn't line up to what other patients in other countries are paying.
Madison, we only got about a minute left here, but I want you to talk to me about Pfizer, because the results kind of left for wanting. They did not give details on tariff impacts. Others have, and they also have, of course, that failed obesity drug experiment. How do you think about their path moving forward?
Yeah, I mean, that is something I think people have been asking for a long time. We've seen Starboard get involved in Pfizer, and there's a lot of questions about what will be their next big hit. People were looking at obesity to be that next thing for Pfizer, and that really hasn't panned out. I mean, we've seen other companies, it's really been a challenge to develop an obesity pill specifically. That's somewhere where Lilly has been excelling, but it's been a bit harder for other companies like Pfizer. And there's really a question still of what is going to be the next big hit after COVID for them, which we've been saying for, almost 2 years now. But when it comes to tariff impacts, we are seeing some uncertainty in the healthcare space.
Yeah, some big questions over Pfizer's pipeline. Bloomberg's Madison Mueller, appreciate your time. Now, coming up less than 5 minutes to go until the opening bells, we'll walk you through all of the action with Anastasia Amoroso. This is Open Interest.
And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, Anti-Money Laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area that comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity, ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. It looked like we would have maybe a positive day because we could get a reprieve on auto tariffs, but you can see futures down 0.5% because Caroline Leavitt at the White House said that showing consumers information about tariffs leading to price hikes is hostile and political. Here's the opening bell on the New York Stock Exchange. Jim Cramer ringing the opening bell, a fantastic and unique human being who has been hosting Mad Money, an iconic show for 20 years. Great to see him there at the NYSE. And down at the NASDAQ market site, you can see the funny hats. That's because this is Churchill Downs. They wear these hats for the Kentucky Derby, right, which is coming up this weekend, like the most exciting 20 seconds in sports. And Churchill Downs has been down big, off 33% year to date. Hopefully they put in the right bets on Saturday. Katie?
All right, let's take a look at some specific names to watch because we're in the heart of earnings season, and we heard from UPS this morning that it plans to cut 20,000 jobs, also to close dozens of facilities. That's as Amazon package volume plummets. It did not update its outlook, and it's certainly not alone in that, Shanali.
Yeah, I am looking here at General Motors, one of those that did not update its outlook. In fact, they've suspended guidance, and they're freezing share buybacks as well. That's on tariff fears. GM also moved the earnings call to Thursday as the White House weighs auto tariff relief. It's down 2.12% at the market open, Matt.
As we've been talking about, apparently plans to show consumers how tariffs contribute to higher costs on each product, if they do. This according to a report by Punchbowl. But the White House press secretary, Caroline Leavitt, said that is a hostile and political act. And at that point, if you look at the futures chart, they just come dropping down. So the market did not like that.
All right, so
from the White House.
Yeah, I'm still waiting.
We have been in an uptrend lately. And JP Morgan's
New York Stock Open has started. Nothing much. AU, we'd like to see AU continue lower, but we'll see what the DXY wants to do. S&P. I don't really have a setup for the S&P, at least for now.
Amoroso and Anastasia, great to have you here. Thanks so much for joining us. What do you think about
It's NFP week, so if we can get a trade today or tomorrow, that would be ideal. Gold's kind of just chopping a lot whilst it's been pushing up. It is chopping a lot.
Look, it's a puts and takes market, and
You know,
obviously,
very
that's some
choppy.
positive news flow that we are seemingly de-escalating the tariffs that were.
But I'd still like to see gold head higher.
April 2nd, so that's a positive, and I think that can.
EU, the setup for EU, or the next area to look at for EU is higher, evidently. So we just have to wait for that. GU is inside the area still. AU, yeah, like I said, AU looks like it can drop lower again.
That's taking place. So the market has to absorb all of that. But net, I would say, Matt, that if you zoom out from the day-to-day or the intraday market volatility, I do think you have a more constructive setup right now where technicals have corrected, and at the same time where I do think we've seen peak tariffs, and there's likely a path lower from here. You know, we've heard it once again from Secretary Bessent this morning that China's tariffs are unsustainable, and they truly are. And when you think about the economy that's been built, you know.
Yeah, guys, it doesn't look like we're gonna get much, but we're gonna give it. We're gonna give it till the news release. So for those of you that are here and still want to stay here with me, right, you're more than welcome to. I'm also gonna stay and see what we can get. I'll probably get some food as well.
And something better. Well, Anastasia, let's talk
And
a
I'll
little
be
bit
back.
more about this specific moment and how you use it, because Matt mentioned the uptrend. We've seen the S&P 500 post 5 straight days of gains, which maybe it didn't feel that way. You have JP Morgan on one side turning tactically bullish, but you have Goldman Sachs on the other side saying that they're actually turning or remain tactically defensive. They're using this sort of.
If I wanted to potentially force a trade or look for a reason to go long,
add to hedges to reload on some of those.
right, I'll do something like this.
If that's the move.
Yeah. The way I think about it is, what's the time horizon for the money that you have at hand? And also, are you fully invested, or do you have
Right,
to
I'll look
cash
at a
in
little
forward?
something
So
like
if the
this.
time horizon is
Take out the
short
high.
term and you're fully invested, yes, I do think that playing defense in the portfolio makes sense. And also, we've liked private credit.
That's what
and
I'd look
continue
at
to
there.
Because you can get paid while you wait out this volatility. So that's for the existing portfolios, and still prioritizing things like staples and utilities and real estate, and actually anything that benefits from potentially lower rates. So that's the current stance, the short-term stance. But if you do have long-term capital to deploy, and if you have cash on the sidelines, these are not moments, but these are periods
Yeah,
of
gold's
adjustments where
literally turned back
should
around
use it
again.
as an opportunity to add to long-term risk. So if the time horizon is 2 years, 3 years, 5 years or more, absolutely, it's not often that we get a 15% drawdown, an opportunity to deploy that cash. So for that pool of money, I would be looking to take more risk. It's just that I wouldn't expect a quick payoff on that in the next couple of months.
Yeah, speaking of quick decisions versus long-term potential pain, you had that Amazon reaction. We've been talking about it all morning since it happened, but then in the last couple of days, talking about Shein and Temu raising prices, particularly on U.S. goods. I want to point out also that the trade deficit this morning was a record. It was $162 billion. It was worse than anybody expected, more than all analysts surveyed by Bloomberg. Consumer goods being imported was a big part of that, front-running those tariffs. What does this mean in terms of the inflation situation heading into the rest of the year? Our own Anna Wong makes this great point that this is the time that retailers want to prepare for the holiday season and the rest of the year and back to school, but it's a tough time, and it could be through the end of the year.
And I think prepare they did. That's exactly what the playbook for a lot of retailers, a lot of companies has been. They've been fast-tracking a lot of those imports. If they're importing cost of goods sold, clearly they've been doing that in anticipation of the tariffs. So this is actually pretty good news, I would say, for the margins of those companies and also for the wallets of the consumers. This is why, for example, you look at some of the early reads on inflation in April, we're not seeing a huge pickup in prices because I think a lot of what's on the shelves today so far has been previously imported. And it's interesting, Shonali, the Dallas index that came out yesterday. Exactly. Something like 55% of the respondents said that they're going to increase prices, but the rest actually did not say that. And they're either going to use existing inventory or maybe they're going to onshore some production, although that was about 6% of those respondents. And then some others said that they're going to use inventory that they previously had or some existing production capacity. So the point is, you have the situation that we're expecting the core PC print this Wednesday to come out at 2.6% year over year. And you might actually see that inflation trend lower in the next,
So far, a really big push from gold this afternoon.
I think we will start to see
a little under 1,600 pips.
To cut rates for the Fed.
And I mean, I think we're pricing in like 5 rate cuts.
Almost four. Almost 4 through the end of the year.
Almost 4, Shonali says. And I believe her.
3.7.
Still, that's a full percent, right? So is that good news, or does this market say, oh, that's because unemployment's going to climb to 5%? That's bad news.
No, look, I think it is good news, and it is warranted, especially if you take all the political back and forth aside. If you look at the data itself, if you have inflation at 2.6% and the potential for it to trend lower, if you have the unemployment rate that weakens a little bit, if you have consumer confidence that's really near record lows and business confidence has plummeted as well, and by the way, you look at financial conditions, they've tightened significantly since the start of the year. So if you were just looking at that setup and that picture, what would you do as a Fed? You would likely cut interest rates. So I think the markets would welcome that. And if we do have to go through the trade and tariff uncertainty, if we can cushion that with rate cuts, which, by the way, that's what eventually happened in 2019 as well. And that's what ultimately turned the market back around.
Well, maybe we'll get some clarity from the Fed on that May 7th meeting. I don't think anyone is quite expecting that, though. Anastasia, it's great to see you. That is Anastasia Amoroso of iCapital. Meanwhile, let's take a look at some of the stocks moving underneath the surface right now, right after the opening bell. We'll do that with Isabel Lee.
Hey, Katie, we're looking at Hilton. So the company's boosting its adjusted EPS.
So our dollar is continuing to head lower. Again, a really nice push here on EU as well.
Really face a lot of uncertainties in the face of rising tariffs. You have the shares kind of flat now.
Right, we've got Tokyo Session High as the next target. Then, of course, we can see whatever's above that.
The company did beat expectations for the first quarter, but that's before tariffs roiled the markets. Up next, we're looking at Royal Caribbean. So this is a different story. The company raised its profit outlook for the year. You see the stock there edging slightly higher by 0.6% as cruise demand continues to defy the increasingly dire travel situation. We have the company saying that bookings grew in April from last year and that cancellation levels are normal. The company also still sees full-year capex of about $5 billion. And last, we have JetBlue. So it's back to the gloom for us. And you see the stock there dropping by as much as 3%. So JetBlue Airways just becomes really the latest company to pull its full-year financial outlook following in the footsteps of Delta Airlines and others. So JetBlue focuses largely on domestic travel, which is mostly affected by the waning demand because of the trade war. The company said unit revenue, which is a measure of fares and demand, could fall as much as 7.5% this quarter. So that's not such a great look. Back to you guys.
Isabel, we thank you so very much. That is Bloomberg's Isabel Lee. Now coming up, UPS announcing a plan to cut 20,000 jobs due to reduced Amazon shipments. We're going to take a look at the company's first quarter report next with Citi's Ari Rosa. This is Bloomberg Open Interest.
All right, let's cut right to it. This is Bloomberg's new show, Primer.
There's not much in this so far.
Technology is a trillion-dollar game. One lost, one again, just by backing the right side.
But what I'm gonna do is look to buy EU in a second.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Is this a negotiation or the new rules of the game?
Got a huge wick going on right now.
How he wants to negotiate.
Do we have a news release at the moment? Or not yet? 17 minutes, okay, not yet.
Negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000
See what gold's doing. Gold's had a mad turnaround. Gold is dropping like it's hot right now.
Bloomberg Television.
Okay.
Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations.
Yeah, there's a crazy volume coming on right now, Gift. You're right. You're right, you're right.
That moves the Nikkei and the rising course conducted by AI.
Gold's literally just wicked straight back around.
If you want to learn to listen for it, we'll show you how.
I don't want to get chopped up today, you know? Like what you see every single week, right? Let me turn down this Bloomberg. What you see every single week is there's usually a day or 2 days in a week where it's ideal to look for trades or it's optimal for trades. So again, we don't know as of yet when those days will be. We can, you know, anticipate what those days could potentially be by looking at, you know, the economic calendar and whatnot. But, you know, you're not going to know for certain.
Remember, the oil giant reports earnings on May 8th, Matt.
All right, May 8th, we will look forward to then for, we'll get Alex Steele on the program on May 8th. One stock on the move today is UPS. It is rising after announcing it will be cutting. It was rising. It was a little bit up. Now it's a little bit down.
Let's see what stock market is doing. Not much.
said it can no longer tell us what's going to happen for the full year. It pulled its forecast, and the street does not like that kind of uncertainty. Joining us now is Ari Rosa, Senior City Transportation Analyst. He has a buy rating on the stock with a target of $123. And Ari, I guess I want to ask how firmly you can stick to that target if not even UPS knows how this year is going to turn out.
Yeah, hey Matt, thank you for having me on. So it's a great question. Look, right now there are a lot of moving pieces, obviously, in the global economy. No one's really sure, and as you pointed out,
Gold has really done a real nice turnaround.
you know, we're shooting in the dark a little bit in terms of developing forecast. Their earnings call actually just ended about 15 minutes ago, so we're going to go back to the drawing board and kind of try to adjust our estimates as best we can. And you know, as I mentioned, we're kind of shooting in the dark a little bit. That said, look, the stock has been very beaten up. It trades at one of its cheapest valuations in a long time, close to a 7% dividend yield, which is near its highest in history. And one of the things that's really notable, the company did $1 billion buyback this quarter, which is significantly higher than what they do traditionally. And so they're kind of indicating to you that the stock is cheap. So we feel very comfortable with our buy rating. You know, in terms of where the actual price target settles out, it's a little harder to say because, you know, again, there are a lot of moving pieces. But I do think that UPS stock is quite cheap at these levels, and quite a lot of bad news is being discounted into shares.
Fair enough. I mean, the dividend yield and the buyback alone should also be good news in addition to some of the measures they're taking. But to speak to the uncertainty just a little bit more, how wide is your range of outcomes for this company, given the pressures around tariffs, given the pressures consumers might feel with inflation and what they might end up getting delivered? Do you have a set of outcomes from worst to best?
Yeah, absolutely. So it's a great question. As we think about the historical range, and we kind of try to develop our price targets based on obviously just a P target and then an earnings number. In terms of earnings, it's a lot harder to say where that might go. And again, there's variability around that. What we saw is in 2024, UPS actually had its worst operating margins in a decade.
Give says, I know White House have have a press conference. Yeah, that could be it, bro. I'm waiting for this news update.
Their business with them, we've seen.
At this point, for me myself, I'm ready to call the day here. You know, I'm ready to call the day here for sure. Because even when I look at EU, right, there's not much inside of here where I would be willing to play, right? So we've got the higher area where I'd like to play some potential shorts from. So all I can do is realistically just wait for that, right? Even if I do want to take a little buy from where we are now, we've pulled down a lot lower than what I was anticipating earlier.
We don't think that global trade is going to cease. We think there's going to be some sort of, I don't want to say benign resolution to the tariff, to tariff discussions, but it seems really hard to reverse these things that have been put in place over decades, right? It's not about one administration. It's not about, one country even, right? It's really about global supply chains are deeply integrated, and UPS plays an essential role in that. And again, that's the reason that we feel comfortable with our buy rating.
What's happening, Ritesh? How you doing, bro? You good?
The short-term call is tough. The longer-term call we feel a lot more comfortable on.
I might have to just call the stream here, you know.
Transportation landscape, because I'm taking a look through your notes. You write you prefer
There's just pure chop going on right now.
So in that very
pure chop.
Supply chain that you're describing, I mean, are some factors, some sectors of it poised a little bit?
We're going to leave the rest of the trades for potentially tomorrow because
the reason we prefer rails is, frankly, they're just better businesses.
There's not much going on. Gold had a nice buy until we start slamming down. Okay. Still looking for lower prices on gold overall, anyways. We did try to go short on EU earlier. The high did not hold, right? We completely pushed above the high by like 2.5 pips, and now we're literally pushing all the way straight back down to profit. AU held the level, and look at that, AU just tanking. That's what we wanted to see from EU, right? This play here, that is literally what we wanted to see from EU, but we didn't get it. If we look at GU still in around entry, so fine.
you could see some of these marginal carriers start to exit the market, and that actually could be very
So yeah,
good for
guys,
rates over the medium
let's
term.
not rush anything. It's Tuesday. If today's not going to be optimal, if today's not going to be great for us, then we'll come back at this tomorrow. Okay?
Ari, we thank you so
Money
much
day,
for your
guys.
analysis. That is Ari
And
Rosa
I'll
of
see you
Citigroup.
tomorrow for
Now,
another
coming up,
stream.
Amazon shares are lower after the White House press secretary had this